Welcome back to the channel, guys. So today we're going to be talking about investing. So I'm going to make this one kind of short. I'm going to go into more detail in later videos, but for now we're just going to kind of establish some simple rules. And investing is simple, should be simple. If somebody is trying to get you to invest in something that is more complicated, it's number one, they're trying to scam you, or number two, they're trying to sell you a course. Before I get any further into the video, I just want to ask you to like the video and subscribe so you can get more videos. Also, if somebody is trying to tell you that an investment has no risk or very low risk, but can get you 20%, 30%, 50% per year, then that's a scam. If somebody is telling you that there is no risk, but they are guaranteeing you any returns above 10%, then that's a scam. Nobody can guarantee returns beyond a certain level unless certain things change within the environment. So let's talk about two main concepts. Number one, we're just going to talk about time horizons and what to investing during these time horizons, and we'll leave that will be pretty much all you need to know about investing. If I never tell you anything more about investing after this video, you'll pretty much know all you need to know. So firstly, time horizon between 0 to 5 years. Within that time horizon, you want to invest in bonds, or you can also invest in Jamaica, you'd invest in fixed deposits. In the US or Canada, you'd invest in what they call CDs, or certificate of deposits. Now, these are fixed income accounts, meaning you're very unlikely to ever really lose money. If you were to buy a 5-year bond, keep it for the entire 5 years, you would get to keep your principal plus any interest. If you're selling a bond before the date that it's due, then there's a possibility that you could lose on it. But a bond is guaranteed as long as you do the full duration. So pretty much these are very low risk investments. Now, within this type of investment, you can expect right now somewhere between 4 to 6% in the US and Canada. I'm not so sure what you're going to get in Jamaica for this, because at the moment interest rates are higher than they've been in the last 15 years. So that's the first time horizon. Between 5 to 10 years, you want to maybe do a mixture of stocks and bonds. Probably more bonds than stocks in this type of time horizon, 5 to 10 years. And I'm going to be telling you about what type of stocks to buy in a moment. So between this time period, this is probably what would be considered intermediate term. That is within a time period where stocks might still be a bit risky, and bonds will give you good stability. I won't spend a lot of time within this time horizon. I'm going to move on to the most important time horizon, and that's 10 years or more. 10 years or more, you want to invest in stocks. Specifically, you want to invest, if you're in the US or Canada, you want to invest in ETFs. Now, these are indexes that allow you to be very diversified. The particular ETF that I'm investing in is called the Vanguard S&P 500 ETF, and this is pretty much the 500 biggest companies in the US. Not quite, but pretty much that's very close. That's an almost accurate description, or the most accurate description I can give in a short video like this one. So what this allows is a situation where you're already diversified just by buying this one fund. It's market cap weighted, meaning bigger stocks like Microsoft will occupy a bigger portion of your portfolio if you were only to invest in this. You can invest, or most people would say you should invest in something that is diversified outside of the US, because this is pretty much the 500 biggest companies in the US. But there's a possibility of you investing in all of the stocks in the US plus many stocks from around the world. That index fund is called the Vanguard Total Stock Market Index Fund. The code is VT. And that one allows you to be diversified right across the world. So the S&P 500 allows you to be diversified across many different industries. The VT allows you to be diversified against many different industries, but also across the entire world. So, and the type of return that you would have gotten over the last 100 years is around 10% per year. The rule of anybody that knows the rule of 70 in mathematics knows that if you're earning roughly 10% per year, that means your money will double every 7 years. This does not mean that this is guaranteed going forward, but this is how the stock market has performed in the past. So very important for me to say to you that past performance does not guarantee future returns. However, personally, I think it's a risk worth taking based on what has happened in the past. Making a calculated risk, that's what I do. So pretty much that's how you should approach investing. Oh, sorry. For people who are living in Jamaica, if you're looking at 10 years or more time horizon, I think if you reach out to many different brokerages, you might be able to invest in these funds. I've never tried them when I was in Jamaica. When I was in Jamaica, what was available to me was mutual funds. Mutual funds, some of them can be similar to these ETFs. The disadvantage of a mutual fund compared to an ETF is that the fee each year that the brokerage is going to charge, or the fund manager for the mutual fund is going to charge, is going to be higher. So these ETFs that I'm telling you about, you're paying less than 0.15%, in some cases less than 0.1% per year in the fees. And when I give you such a small fee, you might think this is insignificant, but there are mutual funds, or there have been mutual funds in the past that have charged as much as 2%. And if you look at 0.1 versus 2%, that's a huge difference. 2% of your portfolio every single year can result, mathematically, if you're earning 10%, you'll think that's small. But that in reality, that can absorb, in some situations, up to almost half of your returns, because that 2% is being taken out every year. It's not being taken out once. So you gotta be very careful when it comes to fees. So if you're gonna be, if you're in Jamaica, I'd recommend trying to get a brokerage that will be able to allow you to invest in these ETFs. But if you can't, and you have to invest in a mutual fund that is properly diversified, try to find one that has low fees and ensure they can tell you exactly which stocks you're investing in. So yeah, that would be what I would recommend for somebody who is living in Jamaica. There is the option, which I've not done yet, but in the future I do plan to do it, and that is to invest in real estate. And people who are looking to invest in real estate, this one is a bit more complicated because I've not done it so far. I'm not sure what time horizon in real estate investment falls within, but I do know that because real estate investment allows you to use leverage, meaning lose borrowed money from the bank to purchase a house, and do a house hack, create an investment property, that tends to multiply your returns, but it also multiplies your risk. So I plan to allow my portfolio to build up to a particular portion where I can use a small portion of my portfolio to invest in real estate, to put down a down payment. That way, if something goes wrong and the real estate market does not go the way I think it will go, then I can always fall back on my stock portfolio to resolve any issues. So we have to be very careful when we start introducing loans, leverage in our investment. Um, if you, I don't recommend somebody doing real estate, but if you were to do it, I'd recommend being very careful in how you do it, and ensure that you're set up in a way where you have the liquidity to resolve problems that might come up, because investing in real estate is not as simple as as investing in stocks. You're going to have tenants. You can search on YouTube to see all the issues that people have with tenants in Canada and the US, and tenants' rights and squatters' rights. There's also upkeep. There's also taxes. So it's a lot for you to think about when you're doing real estate. It's not as passive as the other options, which is why I've avoided it so far. But I do intend at some point to get into real estate. My goal is to get to $250,000 in my stock portfolio. Then I'll use that $50,000 to invest in real estate. That's my plan. That way I'll have $200,000 or more to of a cushion, just in case something goes bad with a real estate investment. So that's my plan, and that's pretty much what you want to look at when you're looking at investments. I will be making more videos in the future about investing.